Hi everyone, welcome to my inaugural video of the StockMonger. I'm really excited about my inaugural video. I hope you take a lot of learning from whatever I have to present over here today. Today's topic is going to be Abbas and the 40 equities. It is a strategy that I have adapted in about the early stages of my stock trading career. It has helped me a lot. It has helped me grow. It has helped me evolve. It has helped me adapt and adopt the stock market for the long run. And I thought this is probably a good time to start sharing that knowledge with what all I've learned throughout the way in my career as a professional trader. So I hope all of you take a lot of learning from this video, and please do like, share and subscribe, and I hope I get a lot of support so I can share more strategies of how to trade in the stock market and how to build your portfolio in the long run. Please be sure to watch the video till the end, because in the end of the video I'll be sharing a chart which I have drawn personally and I've been following it since, which shows the power of compounding in the long term, and the benefits are pretty amazing. So please do watch the video, and any comments that you like to share, please do so. I'll try my best to get back to you. And there is an email link and a Telegram link to my channel. Please go ahead and join it, and I'll be sharing some trades that I'll be doing and the strategies that I've adopted, and also all the videos that I do. All the links will be posted in the Telegram channel as well. So let's start the video. Hi everyone. So today I want to take you through one of the methods that I use to get started in the stock market, and it's theoretically known as Abbas and the 40 equities. So what I used to do is I used to start getting into stocks which I was shortlisted by reading some indicators. In the beginning, yes, indicators wasn't my strong point, technicals wasn't my strong point, so I used to just randomly execute some trades. I used to keep short targets, and once those targets are achieved, I would go ahead and sell it and then look for the next opportunity. So at any given point of time, I would have not more than 40 equities in my entire holding portfolio, and I used to keep rotating based on the sectoral movements, whether it is auto, IT, pharma, banking, and I used to grab the opportunities and get out at small targets and start compounding my way upwards. So let's get started right away. It's a very simple approach, and this can be exercised by any beginner at a very small level, with a very small investment, to try and see if it works. But yes, you have to give it time. You have to give it a little effort in studying the stocks that you want to trade in. So how I started, I'll just take an example. I don't remember exactly how much I started with the capital. So let's just take an example that I had a capital of 1 lakh rupees, and I studied the market for some time. I was watching some videos, and I had a mentor who always said that it's best to buy on dips. After watching a lot of educational videos from many people and reading a lot of content, I learned what are the support and resistance lines. So if it is anywhere near the resistance line and it is not breaking it, then there is going to be a dip. So wait for the dip and then buy in. So basically what I used to do is 1 lakh rupees, I cut it off into 40 equities that I shortlisted. So my investment was 2,500. Again, this is an example. I can't really recall how much I had actually invested. So 2,500 rupees was one block for every equity that I invested in. So I would not cross this amount. Now there are some stocks that are priced above 2,500. I used to generally avoid those stocks. So now that you understood how I broke it down, so I used to keep, in the beginning, yes, being a beginner, novice trader who had very little knowledge, no knowledge about technicals, because no matter how much you study about the stock market before you trade, the best teacher is the stock market itself. And what I used to do is I used to keep a simple target of 3% by noon. By noon, I used to keep a target of 3%, that if it achieves 3%, okay, I am going to book it, I'm going to take the money, and I'm going to keep that. So 3% is not much on 2500. If you see it, it's around 75 rupees. Let's leave aside the charges and the security transaction tax and all that. Let's leave that aside. So I used to keep a target of 3% since I was a beginner. As I evolved into trading, then I started keeping my target at closing at 5%. There were days when I would book it at 5% around noon or around 1 o'clock, and towards closing, some stocks suddenly see a lot of buying happening and they go up to 8, 9, 10, 12%, or even hit upper circuits at 20%, like the mid cap and small cap stocks. So I never worried about that. I said, okay, fine, you know what, let's do something. Let's wait for a stock to cross 5%. And once 5% is achieved, and we'll wait for it to appreciate some more, and then we'll trail the stop loss. We'll trail the stop loss to where the 5% mark exactly is. Because there are some stocks that, you know, they go up, they rocket, then they stay stagnant for some time, and instead of going up more or staying at that level, suddenly they just nosedive. There's a huge selling that comes in. Either it is news driven or stock driven or any reason what it may be. So I used to trail my stop loss to 5%. So if the stock even goes up more towards the closing, and it gives me a good benefit of holding it for a little longer, then I used to get that additional percentage. So 5% basically was my booking amount. So on 2,500, that would be 125, which is again much better. So that's the difference, just 2%, and you cross into the 3-figure mark. So like this, I used to accumulate all the amount, and this 125, if in a month I get out of 22 trading days, that average, there are 22 trading days in a calendar month. So 125, if I get even 20 right, even 20 trades right, so that's again 2,500 rupees. So now I don't have to trade only 40 stocks. Now my flexibility has increased and I've gone up to 41. So this increases my chances of getting an additional 5% in the month. So I used to compound it this way. Yes, it takes time, it takes patience. Stock market is not for the impatient. You know, it's all about buying, selling, and 80% is basically the patience of growing in the market. So I used to go from 125 rupees per stock that I used to book, and then I used to rotate that into the next opportunity. So now that I've shown you how I invest, so I used to pick the stocks, let's say from auto sector, I'll pick around 3 stocks. From pharma, I'll pick around 3 stocks, and so on. Banking, I'll take around 4 stocks, and IT, again I'll take around 3 stocks. Like this, and then there were mid caps, then there were small caps. You know, some of these mid caps and small caps, they just shoot up to 10, 15, 20%. Some stocks which I tried to take at the opening, suddenly would open up upper circuit, so there was no chance of that. Now, what do I do when, let's say, out of all these, let's say here I take about 10 and here about 10, and they all total about 40 as per my investment. So if I get 1 over here, 0 over here, 0 over here, 1 over here, let's say 3 over here and 0 over here, in the same day, you know, like I have 3, 4, 5. I have 5 stocks that have gone past 5%. Do I book all of them? Yes, I used to book all of them. I would take 3, 4, and 5. 5 stocks would give me 5%. So now I have winners of in mid cap I have 3, in IT I have 1, in auto I have 1. So now that is 5 stocks. 5 stocks have given me 5%. Now each stock is giving me 125 rupees into 5. That is basically 625 rupees that I booked in a single day. At the same time, all the stocks that I have shortlisted to take as they dip in the day, and I've been watching them for quite some time, I would go ahead and the amount that is released from the winning stocks, the 2,500, I would go ahead and buy those stocks immediately at the same block size of 2500. Now this profit is accumulated. I don't use that profit. I wait for it to accumulate, and when in my margin there is 2500 extra, I go ahead and take stock number 41. Now if I'm able to hit another 625 the entire week, let's say I have 5 winning trades of 5%, or let's say some trades have given me more than 5%, they've given me 10% or 20%, they've rallied a lot. I wouldn't hold on to them, because next day if suddenly they hit lower circuit, I wouldn't be able to sell them, so then I would be stuck. So let's say throughout the week I have made a winning trade, booked a profit of 625 rupees per day. So in 5 days, let's say there are 5 days, the whole week is the trading week without any holidays, I would have booked 3125 rupees. Now on Friday I would open an additional block, which I thought of doing at the end of the month. I have actually got that in a week. So now that I have 41 equities to trade, I would go ahead and keep on increasing the number of equities that I'm trading in. That would increase the probability of me hitting at least one stock at 5% per day. Now when that happens, you get the habit of making the right trades based on the technical analysis that you use and the indicators that you use to when to get into a stock. And also you have the watch list that you create. You can keep monitoring the stocks that you have an intention of buying, and in that day the stock that fell the most, you might want to study it a bit more and see if this is the right entry time. So it's all about how you increase your flexibility. Now if I have 40 stocks invested, there is a probability of the losing side being much greater than the winning side. Now the losing side has, let's say, 36 in red, and the winning side has 4 that have reached the 5% target. What would I do? I would look for adjusting if I see no confidence in any one of these stocks which have lost a lot of value in the same day. Generally, yes, the rule is to cut your losses early and to hang on to your winners. So if I have 4 winners of the day, I would go ahead and book them. And if I have 36 equities that are in red, see, my target is not to book every day. My target is to book at the target that I want to. And if I am getting 5% at any given day, I'll book it. So now these 4 next, if I say I shift them into new blocks. Now all of them are in red. And I've been waiting, let's say, for 1 week or 2 weeks. I would generally, I've been in a situation, so I can share my experience on this. I would go ahead and see which of the stocks that I can shave off partially. Why would I want to close a complete trade in a complete loss, whereas I can probably cut some of the losses? Let's say I am holding 250 shares of a penny stock that is priced at 10. So that's my investment of 2500. Now this 10 became 7. So now I am at a loss of 750 rupees. 750 rupees. So now I would go ahead and book a few quantity, let's say about 20 or 30 quantity, such that the loss is not greater, the loss that I'm booking is not greater than the profits I've already booked, because I want my account to be in green. So if I shave off some quantity from this loss, I'll hold on to the loss, I'll shave off some quantity, and I will free up some capital where it would total to 2500. When I shave off enough capital from all the losing trades to stay within my profit that I've already booked, then I would put this into another stock opportunity that I would see. So you book a profit of 10,000 rupees and then you start adding that profit back into the equities, investing at 2750. Now 2750, the profit that you book is 5%. It comes to 137.5 rupees. So now your journey to 10,000 will be much faster than it was booking 5% at 2500, because the profit is bigger over here now. So again, when you hit 10,000, then you only stay invested in 40 equities and you increase the block size to 3,000. With 3,000, 5% would be 150. So now the number of winning trades at this level is higher than this, and this is higher than this. Now how many trades do you need to win to get to a 10,000 profit? Much lesser. It's going to be faster. The process is going to be faster. Yes, one of those days if you do hit a jackpot of, let's say, 2 or 3 stocks hit upper circuit, so your probability of getting to 10,000 is much quicker. Then let's say you add another 10,000, then you take this investment to 3250. You're still trading 40 equities at a time, 5%. Now you're booking 162.5 rupees. Now with this profit, your journey to 10,000 is much faster. So this will take time. The more you go according to plan. Now I'm not saying this is a fixed plan, this is a foolproof plan that you have to follow. So if you go according to plan, whatever you plan to trade, please trade the plan. In the middle, if you try to tweak it and you try to do some experiments, then you will not be able to concentrate on this or the other strategy that you adopted. So now you will be having your feet at 2 different places. One is north, one is south, and that is not going to be very pretty for you. You're going to be confused and then you're going to do bad trades. We don't want that. So with this method, one method is where you only stick to 40 equities and you try to accumulate a 10,000 profit. That is again based on the example of the investment that I gave. The other strategy is that from 40 you go to 41, or you go to 42, then you go to 43. You keep increasing the equities that you trade in, so that your probability of getting a 5% winner every day increases with the number of equities that you have in your holding. The advantage of this is that you don't end up investing a little too much. It is easier to adjust when you cut off partial losses and take up a new block, or you invest in a trade which you think is going to fire. That's this. In this, the advantage is you increase the flexibility, so you have higher probability of hitting 5%. The disadvantage of this is that you'll have too many holdings in your portfolio. Now, as 2020 has shown that yes, there can be a news-driven crash and suddenly everything is suddenly just goes into red, it explodes. That could put you in a fix. So it all depends on how you manage it. So what I did personally, I'll share that as well, that I had 2 accounts where I used to adopt this strategy on one account and adopt this strategy on the second account. And believe me, both strategies were working in their own way. I wouldn't say that this was doing better than this or vice versa. They were doing it well, and they were I was managing to grow it bit by bit. So for all the beginners who are looking for a stepping stone as to how to get into the markets and how to play it, this is the way I did it, and it worked for me, and I've been compounding over and over again. So now I'll show you the chart which explains the power of compounding if consistently you are booking one trade at 5% a day. Before we get into that, what I want to share with you is also that let's say for example I had 1 lakh, I cut it into 40 trades. Let's say this is that first account which I was only sticking to 40 at any given point of time. I never made it 41 or 42. I was concentrating on increasing the block size instead of increasing the equity count. So my way of calculating was 2500 is my only investment. It is my only investment. I haven't invested 1 lakh. I put that in my psychology. That my investment is not 1 lakh, my investment is 2500. Now every day if I am able to increase this between 3% to 5%. Now see, there are 40 trades. From 40 trades, if one is giving 5% today, then one is giving 5% tomorrow, then third one is giving 5% on the third day, fourth day, and so on. Now there's consistency in hitting 5% every day. So this is the investment that I actually look at, which is growing consistently between 3 to 5% a day. So I had 2 accounts where I applied the same method, and one was increasing the flexibility while one was increasing the investment per block. So I combined the advantages of both strategies, and believe me, it worked wonders. I'm not going to actually share how much is my portfolio size, but I can tell you this, that it has grown with time. So now I'll take you to the chart and show you the power of compounding in the long term. Thank you for watching. So everybody, this is the chart that I wanted to show you, where you start with an initial investment per block of 2500 rupees, and if you're booking per block at a rate of 5% daily, and the days it takes you to cover 10,000 in profits is 80, which is roughly around less than 4 trading months. So you are trading in a very safe way, and the 125 rupees 5% that you're booking on this block size, this is again just an illustration. You can do your own calculations based on your investment, and obviously not everything goes according to plan, but this is a plan, and what you plan to trade, you trade the plan, and this is what I've been following for quite some time, and I could say I'm not exactly on track, but yes, I'm getting there. So initial investment of 2500, you're booking 5% daily per block. Now the number of blocks that you have depends on, again, on your investment. Is it 1 lakh or 2 lakhs or 10 lakhs? That's totally up to you. Now the days taken to cover 10,000 profits are 80, and once you cover 10,000 profits, that is where you add 250 rupees to the investment block, and 5% on that would be 137.5, and the days to cover keeps reducing. As you can see, it keeps going down. At the 1 year mark, your investment would go from 2,500 to 3,000 rupees per block. Then at the 2 year mark, you would be at 4,250 per block, and I think that's pretty good. You've gone up by 1750 rupees in 2 years. Your investment doubles midway between the second and third year at 5,000 per block, and now your profits that you're booking 5% target per day is it will take you 40 days. So the time has actually halved. The time it took you to book 10,000 profits was 80 when you started. Now it's at 40. So let's see where this can take us. Now after the third year, your investment per block is now 5,750. You triple just before you close 4 years, and it's taking you 27 days at the rate of 375 per day to book 10,000 profits. So now there are 22 trading days in a month, at the most 23. So we would hit that mark of hitting 10,000 per month in profits somewhere after the 4 years and 3 months. So 8,750 is your block size. You would quadruple your investment just before the 5 year mark, and that would take 20 days for you to book a monthly a profit of 10,000 to keep increasing your block size. So now you see the potential. This is always better for doing it in the long term,
As investors, as a safe way to grow your portfolio day by day, month on month, year on year. So now I've showed you the 5-year plan, and you can go ahead and decide your block investment. But please note that this is a 40 equity theory. If you want to tweak it as per your convenience, feel free to do so. I've showed you the plan, I showed how it's charted out. And in 5 years, if you are able to quadruple your investment only trading safely on equities, there's nothing like it. So, thank you for watching my video. Please do like, share, and subscribe. And please do spread the message of how safe investing can begin with, and how do you chart your way forward. So, I wish you the best of luck. And anything that you would like to know about, any more videos that I can make, please do share it in the comments, and I will definitely consider it. Thank you so much. Bye.
If you'd like to trade with me, join my WhatsApp broadcast group and get technical analysis on Nifty 50 and Bank Nifty daily, along with the stocks that I am trading. You can WhatsApp me on the number given on this screen.